To master overnight swing trading, the name of the game is to not get kicked out of the game, blowing up your account. So here are 3 rules and quite possibly a bonus to help you stay in the game so you can trade another day. This first one's big. Most of the accounts I've blown up in the past were based off of this one action, doubling down. When you have a losing position, get out and retrade with new information. Don't double down on a hunch or because you think it should work. Exit the trade at the appropriate time or the best time, or just get out and then reestablish a new trade. Doubling down can work, and that's the danger. It works once, and so you try it again and again and again until your account is drained to zero. Rule number 2, avoid hedge trades during flat markets. Hey, we're all about hedge trades, meaning protecting yourself with options, such as a 2-to-1, 3-to-1, 4-to-1 options ratio. But those work well when the market is volatile, when there are big moves. However, when you have a hedge trade when the market's flat, such as maybe the middle of summer, you could just lose on both ends because the market doesn't go anywhere. So in those situations, consider just a smaller directional trade. Before I give you the bonus, here's the 3rd rule. Master your exit. It's helpful to get a good price when you buy your options or ETF or stock, but it's even more important to know how you're going to exit. Have rules. Make notes. Have a log on what happened the next day, what happened overnight, and how did you approach the exit. Now, if you're just too emotional, like many traders are, that is the downfall of many traders, it just might be a good idea to do a timed exit. Maybe when the market opens, you automatically sell, or perhaps watch trends and say, hey, I can get a better price quite often if I just sell at 10 o'clock versus 9:30 Eastern Time, or maybe 11 o'clock as the market matures. The bonus is rather boring. This is because we're looking for consistency. And that's why I have bonus rule number 4. And that is to not jump from strategy to strategy, always looking for something a little bit better. Look, paper trade first, test out a strategy, and if it seems that it is a good strategy and works for you, well, then start to put a little money in and develop your strategy and your own rules. Develop an understanding, the ins and outs. When do I buy? When do I sell? Which ETFs or options do I generally use? In other words, be consistent in terms of how you trade and not to outguess the market every time. That's why it's important to get to know SPY or QQQ really well. And that's why it's important to know the SPY-T process if you're using SPY-T as your overnight swing trade. Be consistent, and that will help you with consistent profits. And I'll see you in the next video.